We're entering one of the most dangerous periods in the market for the US stock markets and Bitcoin. But is it as bad as everyone is making out? Today's video, we're going to look at a lot of data. So make sure you are subscribed, hit that like button. And if you have to watch it a second time, I suggest you do. There is going to be a lot of data coming at you in this video, as what we're led to believe typically doesn't always turn out the way we are told. So, without further ado, you know where you are. We're at the home of the macro cycle analysis channel right here, studying the past to forecast the future. As I said before, like and subscribe. Top of the video description is our sale on for TIA Premium. I'll talk more about this later, but if you want to go ahead and click that link, this is what you do: name, email address, and get on with it. And we'll have a look at some of the reviews and results in just a moment. But let's start with September. The dreaded Rectember, the time when the markets should be collapsing as per every other year in history. That's what we're led to believe, and that's what we're told over and over again. But as per usual, it comes down to the data and the context in which that data is given to us. If we cannot read the data correctly, then it's nothing more than toilet paper. Use it, lose it, it doesn't matter. Let's try and decipher what is going on here. So the first piece I want to have a look at is the VIX. The VIX has been plummeting lately, which is absolutely fantastic news for the bulls. The bull market in general, for the SP500, continues on yet again, unlike what we've been told about the stock markets. They're supposed to be collapsing, but we have been hitting new highs over and over again. And August actually closed at its second highest level this year, only second to last month. And we had a very big bounce up at the close. So that's a pretty strong month, as you can see. 50% level was almost touched to the T, and we had a nice close up at that higher price there. So September is the red month, the month that we're all supposed to be fearful of. But let's get back to the VIX and the forward-looking results here. Potentially in the next month, we're going to be concerned with the next 6 months and the next 12 months. They have some incredible results when we see the VIX close below 14 in the month of August. So, as we just said there, when it closes below 14 in August, the S&P rallied 89% of the time over the subsequent 1 and 6 month period. So that means September could potentially be a positive month. I'm not saying by much. I'm not saying that it could break the top in July, but it could potentially be a positive month, and it may only be by a fraction of a percent, but we're told to fear September. And we were told that August was going to be that collapsing point. And of course, many people missed out on that bottom opportunity. I'm talking specifically of the stock markets here before we get into BTC, because of course, BTC has its own issues at the moment. So I want to go through that after we get through a lot of this data, which is helping the overall market sentiment and basically the structure of the market as it continues to hold up despite the recession, the looming recession, the calls that there is more money printing or less money printing, depending on which news headline you want to read on each particular day. So the VIX has rallied 89% of the time over these periods. The S&P has rallied. A year later, large cap index was higher every time, despite several precedents that coincided with FOMC tightening cycles. It's what's going on now. We've got the tightening cycles 100% of the time. 12 months from now, the VIX, or the S&P 500, was up with an average max gain of 16.5%. That's a new all-time high for the S&P. And remember what we looked at before for the price of Bitcoin. The S&P at this stage typically hits a new all-time high, has a bit of a pullback, and then on its second attempt at a new all-time high above that previous one, which it just hit, then you start to see Bitcoin rally and start to move into that mania phase of the bull market. So as I've talked about, we're in the bull market as I'm measuring it for Bitcoin from the low to the high. And I say the cycle low is in at 15.5 grand. Now, granted, you could call it a transitional period or a trans period for Bitcoin, still moving from a bear to a bull. But the main thing here is if you just want to have some clear data points measuring from an exact top to an exact bottom and an exact bottom to an exact top, well, then I'm saying that we're in a bull market because don't believe that the 15.5K low is going to get broken on Bitcoin. So we'll have to see over the course of the next couple of years. But this is absolutely incredible to see 100%. Of course, it's not guaranteed. Nothing is guaranteed in the markets, but we have some pretty high figures here that we could see positive results in the S&P 1 month from now, potentially 6 months from now, and of course, September next year. I do believe that the S&P 500 will be at a higher price than it currently is right now. Now, this is stuff that we've been looking at for over 12 months now, going back to a lot of this data. And basically, it's been working out very, very sweetly. 12 months ago, we were rounding the bottom of the S&P 500. That's your September bar. There's your October big bounce. And of course, the rest is history, while everyone else is fearing the market. 30+% to the upside. Take it or leave it. Most have left it and now hoping for further downside. Of course, September, it's all dependent upon the context in which we're looking at the cycle. So let's go ahead and throw on some of these cycle lines. Let's get rid of some of the other lines here. This is our September, and each of these vertical white lines are September. Now I've got the 50% for the macro view here. While the market is trading above that, it's strong. While if it goes underneath, it's weak. So we get the point of that. We can remove that just so we have some clearer views here on the chart. So September was a red month last year, but it bottomed. It showed a bottom in the market along with October. September was a red month in 2021. It was coming to the peak, but what happened in October? Nice green month on the way out. And it was 4% down. That was after August was up though. Then we had a bit of a pullback and away we went. August was up in 2020. September, pullback. October, slight pullback, but didn't go lower. And away we went again at the end of the year. You have to go back to 2019 to see a green September, but look what happened the month before. August was red, push down and a higher close. Does that look similar to what's happening right now? A push down, higher close. How much was it up by then? 1.7%. So it's all in context to what's going on in the market at that particular time. And is it as bad as everyone's saying? Is it going to be one of these sorts of red months? So far, it doesn't look like it is, going back to 2019. And 2019 was also a pre-election year, and I'll get to that data as well. As I said, there's a lot of data to get through. Green, pull back into October. We know October typically does have some significant lows. It had the cycle low so far, but what we've seen at this stage, it doesn't look like we've got that chance to do it this time around. Maybe we get a dip slightly lower. We'll wait and see, but it doesn't look like it's as severe as many are making out. Going back to 2017, August was red, only slightly. September was up. August, September were red, basically flat when you come to the closing price. October, November, market takes off from that point. So another great buy the dip opportunity. September basically marked the low along with August, and then there was a green October. August was up, September was down. August was down, September was up. August was up, September was up. You have to come back to 2011 now. And this was another significant low, but of course, August was down and September didn't go any lower. October held the low and bounced away from that point, similar to what happened in 2022. August, red. We've seen a red August. September, green. September, green in 2009, but remember it was coming out of the cycle low. And at that time, the fear was extreme. Everyone was saying this market had to collapse. 2008, another red September with a slight green August. But of course, look at that trend. We are not in that same sort of trend right now. Now, I can keep going back over and over these sorts of periods, but I hope you get the point in that. Otherwise, this video is going to be extremely long as we get through a ton of data. So far, it's not looking like we're going to get this Hail Mary attempt at crashing to new lows, and potentially the August bottom that came in for the S&P is probably the low there. S&P 500 average return in September is negative 0.6 since 1950. So where does that put the S&P 500? This is all leading up to seeing what could potentially happen with BTC. So if we go from the close of August to 0.66, it's literally there. What could happen in between? A lot of fear, a lot of greed. We could get a range trade where it doesn't even break any of the highs or the lows. But at the end of the day, we're looking at the closing price here on the macro. When August was lower, which it was, 0.65. When August is higher, 0.68. So it's going back to 1950. Basically, it's a non-event. Looking at September, percentage change, versus the pre-election year. Now, this one's really interesting. This is the average here. If you can see, move my head out of the way there. That's the average. That's what happened in 2019, as we just saw. 2015, negative 3%. 2011, that was that big move down with August, but it marked the bottom. 2007, obviously the peak in the market, and so on and so forth. You can see I had a positive time, 2%, 1%. So really, it still seems like it's a reasonable non-event when we look at the grand scale of things and in the pre-election year. Remember, the best start to the year for S&P 500 through to July. So we have a positive year into July since 1997, when it was less than 17.5% year to date. Going into August, stocks had dropped in August the past 4 times. Make that 5 after last year. So from the start of the year to end of July, it was at less than 17.5%. What happens? But did you know September has been higher those 4 years? So when August was down, September was up at an average of 3.5%. All right, so where does that put the S&P if we were up 3.5% from the close of August? 3.5% sits us approximately at 4660 on the S&P 500, which would be the second highest close in history, don't forget. So there's a lot of things pointing towards this not being as bad as the majority are pointing out. They keep pointing red September, but really when you start to analyze that sort of data, there's no context into what stage of the cycle that we are in. We are in the bull market stage. I don't know why people are still calling this a bear market. A bull market does not begin once the all-time high crosses. The bull market begins from the low. And yes, it does take some skill, I guess, to figure out whether this is going to be the low or not. But we've covered many times before why we think this is low, and we're not going to see a break of 3,800 points on the S&P 500. So with that in mind, we're considering this the new bull market. Plus, technically, it's up 20% from the low. So technically speaking, it is a bull market. Not my opinion. That's the technical definition of a bull market for the S&P 500, just like it is for a bear market when it's 20% down from the high. So with that in mind and all the rest of this data, it seems like September might be up again. Again, September does not have to be bad. 50%, nice bounce, that's where we are now. So going down to the shorter term after we've gone through a bit of that data there, we have had a very significant bounce from the low. And go back a few videos, I did talk about this potentially being an important low for this period of the quarter 3 and potentially into the early part of quarter 4 as we came into that low and then bounced away for 1, 2, 3 tops and then a 4th top as well. So a higher high, and we had 3 times higher lows, which is a pretty strong signal. Quick flash crash, higher low formed the next day, market takes off from there. Also on the shorter term for the S&P, it's above 50% at this stage with 4 closes so far. Doesn't mean September can't come back and we get a bit more of a churny period, which is potentially what a lot are expecting. I guess a lot are expecting a further collapse, so there's not as many. But in terms of staying within this trading range, it seems reasonably plausible considering we've had such a strong move up and we need some time to digest the move. The VIX is also helping us out here, saying that, well, the volatility is dropping off. It seems like the low is in. There it is, unless we start to see this thing bounce up and take out that, or form a lower high on the VIX. So if this was to start to come back up and then form a lower high, and the S&P 500 also start to come back and put in a higher low, well, probably going to start to see more of the churn and then consolidation to get back above those prices. So as we've seen, while the VIX is in this area, 11 to 17, bull market is on. Another thing I pointed out on Twitter the other day, we had a new all-time high close for NVIDIA. That was a day before last. It's trading around its all-time highs. Tesla closing above $250 and above 50% level. Amazon within 7% of a new recent high. Apple within 8% of a new all-time high. S&P within 7% of a new all-time high. It sounds like I'm a perma bull. I'm not a perma bull. I'm a bull when the market is saying it's going up. You should be buying the dips. This is opposite to what the majority is saying. And I hear some people say, well, there's all this economic turmoil. And no, there's a lot of people saying it's bullish. Maybe you're only hearing some of the bulls now that you're hearing my bullishness, but believe me, go on to CNN, go on to CNBCs, go onto some of the YouTube channels that have just economic analysts and hedge fund guys and Bloomberg people and all this sort of stuff, they are still saying that the markets should be collapsing. I was literally on a tweet space yesterday with 6,000 people online, one of the biggest ones through that crypto space. More than half of those guys were bears, calling it a bear market. And it was me and Eric Crown trying to tell them, you can't have a bear market with all of this technical structure, all-time high closes. It blows my mind. 4-year presidential election cycle, midterm year, weak and sweet spots. I'm going to go into this in a little more detail because I think I'm running out of time for this video. I've got to get into Bitcoin. Weak spots, 2022, midterm. Okay, so Q2, Q3. Yep, we saw that. Last year, Q4, fantastic, sweet spot. Q1, Q2 this year, sweet spots. Q3, basically flat for DJI. And then Q4, going to pump. Be ready. That's Q4. Could be late in Q4, could be early. Not sure yet. Let's wait and see how things play out. But I'm going to come back to this because this is fantastic for the cycle and our roadmap moving forward. Now, I'm also going to come back to this as well as we're running out of time, but I got a tweet from my good friend, Seth, going through what happens in the NASDAQ. And it looks like the NASDAQ will also pump as well based on a lot of historical data. Another quick bit of news here. Housing prices are up again. The data's through for June. House prices are up in the US, not my opinion. Top 20 cities that they use here for the Case-Shiller 20 City Composite Home Price Index. That's 4 straight months for the US being up, and it's 6 months in Australia for being up. All right, let's get on to some of the BTC stuff. So Bitcoin is flat once again after it has retraced the grayscale pump. Everyone's been talking about that over the last couple of days. There's your grayscale pump. There is your dump. You know, we've been looking at the 50% level to the downside, which comes in at about 23,600. So keep an eye on that over the course of September. So although we're seeing a lot of positive news for the stock markets, basically that it could be flat and maybe we test the highs, test the lows during this consolidation period, it doesn't keep Bitcoin completely out of the woodworks, but it probably brings in some more support at these lower levels around 23.6. How does it bring in that support? Well, the market isn't collapsing. So maybe that gives Bitcoin and buys Bitcoin some more time at consolidation 25, 24. Maybe we get a quick flush out down to the 50% level at 23 because we know the 50% level has been working very, very well for all sorts of timeframes for BTC across 2023 and of course history as well. So I've got here, and I post this out on Twitter. If you're not following, definitely go and do that as well. But crypto Twitter will lose their absolute minds. They'll lose their shit in this gap. So be ready for that. It's about a 9% gap to fill from 26K down to about $23,500. And the reason for that is, well, the market hasn't been moving and we don't have much volatility. So as soon as there's a few percent more than what people are used to, that's when things go crazy. And from that point, what we'll hear is all this sort of BS. 15K, 14K, 12K, 10K. You know, when we get those pricings, those calls, that we're getting close to the end and potentially a macro higher low forming. So my eyes are very firmly on 23.6 because we did not break out of 32 and my calls, what I was talking about for never revisiting 24K, were not met. We had to break 32 for 24 to not be met. Like I said, at 15.5 and 19.5, we had those breakouts. I'm saying we're not going to see 15.5K again, and I'm saying we're not going to see 19.5K again. We're talking about closes below those levels. I was getting ready for 24K, but we did not get the break above 32K. And I think once that eventually happens later this Q4, maybe 2024, we get the break above 32, that's going to be much better news for the BTC bulls because then it's more likely we will not see underneath 24K at that stage. So if you hear people talking about that, you know how to inform them more correctly, waiting on those breaks at 32. So to the downside, 23.6, I still firmly there, and we're at 25.8 right now. So I just wanted to make a quick mention, top of the video description, TIAcrypto.com, we're having a sale on TIA Premium. Subscribe. This is some of the fantastic reviews we've had from new members just in the last couple of days. I want to say a big thank you. It only took them about 3 months to start making profits. Remember, this is an entire course to learn how to trade profitably like the 1%. And the reviews, the results that you guys are getting are phenomenal. 300%, 68%. And this is just from the last video I put up. 26%, nice 35. So congratulations to you guys who are crushing the game out there. If you want to know more while the sale is on, link in the top of the video description, subscribe to that free newsletter. So don't get caught out with BTC as the masses lose their crap on little moves to the downside. In terms of the short term, we're looking at that 23.6. And in terms of timing, I'm going to use this and go through it in a little more detail in future videos. What we're looking at is the time in where we are right now compared to where that breakout is going to be. Now I'm going to go through it in another video. This one's gone too long. So thanks again for your time, your attention. Like and subscribe. Link in the top of the video description. You guys know what to do. I'll see you at the next one. Have a fantastic weekend. And I'll see you from Greece in the next video. Until then, peace out.